Let's start with a thought that's honestly pretty unsettling. Right now, at this very moment, thousands, possibly even millions of retirees are at risk of losing serious money, and the reason is painfully simple: they have no idea it's happening. A new rule has quietly appeared in the US tax code, almost like a secret, and for some reason, no one is shouting about it from the rooftops, even though they absolutely should be. And let me be clear, this is not some tiny tweak worth a couple $100 that you can safely ignore. We're talking about a fundamental shift in how the government looks at your income during your retirement years. This is about thousands of dollars that both legally and morally should stay in your pocket, in your bank account, instead of disappearing into the black hole of the IRS. To make sure you understand the scale of this, let me give you one very specific number, a number that's worth a few minutes of your time. That number is $12,000. That's the potential additional tax deduction for a married couple of retirees, $12,000. So where does this sudden generosity come from, and what's the catch? Let's slow down and break this down step by step, because this mechanism is surprisingly elegant. It works like a perfectly designed system where each piece doesn't replace the others, but stacks on top of them, making your financial protection stronger and stronger. So what exactly is this thing? Officially, it's called the senior bonus deduction, but I like to call it the layer cake effect, and in a moment you'll see why. Its real power doesn't come from replacing existing deductions, it comes from adding to them. Picture this, you're building a tower of tax protection. At the very bottom, you already have the standard deduction. That's the biggest, most solid layer of the cake. Next, once you turn 65, the tax code lets you add another layer on top, the age-based additional deduction that's been around for years. And now, here's the really good part. Starting in 2025, the government allows you to place one more massive golden layer on top of everything else, the new senior bonus deduction. It doesn't cancel anything you already have, it doesn't replace anything. It simply stacks on top, making the entire structure taller, stronger, and far more powerful. And here's what makes this rule truly unusual. Normally, the tax code forces you to choose. Either you itemize every expense down to the last receipt, or you take the standard deduction and keep things simple. This new bonus doesn't care. It works either way. Itemized or standard, it applies to everyone. That's what makes it so flexible and so accessible to retirees across the country. Now that we understand the principle, let's put theory aside and grab a calculator, because the numbers you're about to hear don't apply to someone else. They apply to you, and they might genuinely shock you. Let's do the math. Take a single retiree, age 65 or older. In 2025, the standard deduction is projected to be about $15,150. On top of that, we add the existing age-based deduction of roughly $2,000, and now we stack the new bonus on top, another $6,000. Add it all together, and you get nearly $24,000? Let that sink in for a moment. That's $24,000 of your annual income that the IRS simply does not see. You pay zero federal income tax on that money. But the real magic, as promised, happens with married couples. If both spouses are over 65, here's how it looks. Their combined standard deduction is already around $29,200. The age-based additions for both spouses add another $3,200. And the cherry on top of this financial cake, the senior bonus deduction for a couple, $12,000. When you add all of this together, the total amount of income fully shielded from federal taxes exceeds $44,000. $44,000. This is not pocket change. This is not a nice little perk. For many people, this is money that pays rising medical bills. Money that helps support children or spoil grandchildren. Money for long overdue car repairs or home maintenance. This is real relief, the kind you can actually feel. Sounds too good to be true? You're absolutely right to approach this with a healthy dose of skepticism, because this incredibly generous benefit comes with one very serious and critically important catch. It turns this opportunity into a race against time. Here's the key detail you must understand. This senior bonus deduction is temporary. Let me say that again because this needs to be carved in stone. It is temporary. It only applies to tax years 2025 through 2028. That's it. We have 4 years to take full advantage of it. 4 chances. That means if you don't act now, by the time you file your last eligible return in 2029, the clock will have run out. The carriage turns back into a pumpkin. The opportunity simply disappears unless Congress decides to extend it in the future, which is never something you should count on. That's why this requires strategic thinking and real planning, starting today, not someday later. But time isn't the only limitation. There's also what I call an income trap, and falling into it can quietly erase your benefit if you're not careful. Let's be honest, this deduction was designed primarily to help retirees with low to moderate incomes. Because of that, the government set very clear income thresholds, and you need to know them. Please remember these numbers. For single retirees, the bonus deduction begins to phase out once annual income exceeds $75,000. For married couples filing jointly, the phase out starts at $150,000 per year. So what happens if you earn just a little more than that? Here's the good news. You don't lose everything at once. The deduction doesn't vanish overnight, it phases out gradually. The math is fairly simple. For every $1,000 of income above the limit, your bonus deduction is reduced by $60. That means even if you go slightly over the threshold, you can still keep a large portion of the benefit. So let's pause and summarize. You meet the age requirement, your income falls within the allowed range. What's next? How do you actually claim this money? It comes down to a simple 3-step process. And first, an important clarification. Forget the rumor that this deduction is applied automatically. It is not. You must actively claim it. Step 1. When it's time to file your 2025 tax return, which you'll do in early 2026, use Form 1040 SR. This is a special version of the standard tax return designed specifically for seniors. Bigger print, clearer instructions, much easier to use. Step 2. On that form, you'll see a box labeled age 65 or older. Check it. That single simple check mark is like turning the key in the ignition. It signals the IRS that you're eligible for senior-related tax benefits. Step 3. You'll need to complete a brand new attachment created specifically for this deduction, Schedule 1A. That's where the actual bonus calculation happens. Just 3 straightforward steps. But before you rush off to do them, there's one dangerous myth spreading online that we need to shut down right now. Let's clear this up once and for all. You may have heard claims that this new deduction completely eliminates taxes on your Social Security benefits. That is not true. The rules for taxing Social Security have not changed. However, and this part matters, by significantly lowering your overall taxable income, this deduction can indirectly reduce the portion of your Social Security benefits that are taxed. For some people, it may even reduce that taxable portion to 0, but it does not magically make Social Security tax-free with the snap of a finger. And now, the most important warning of all. Whenever positive financial news like this appears, scammers are never far behind. I can almost guarantee that you'll soon see ads from so-called helpers offering for a fee to set up or secure this deduction for you. Please be extremely careful. Here's the golden rule. Never pay anyone a single dollar for this. All official information and all required forms are available for free on the official website of the Internal Revenue Service. Don't leave your hard-earned money on the table simply because no one told you about this. You have 4 years, a rare and limited window, to use this opportunity to make retirement a little more secure, a little more stable, and a lot less stressful. If this was helpful, support the channel, leave a comment, subscribe, and hit like. It really helps us keep making content like this.